Hello everyone, this is Brook, today in DeFi Senior Analyst. And for today, I'd like to quickly go through an interesting new protocol called TermMax. TermMax is a fixed rate lending and borrowing protocol. And it's been live for almost a year now. And not until recently that its TVO started to grow like pretty fast. And the reason why it's been growing pretty fast is because that the product, which is a fixed rate lending and borrowing, goes really well with the current trend of yield-bearing stablecoins. And so for yield-bearing stablecoins, where we have a lot of products such as the RWA-backed stablecoin like the Enzen USDZ and also Syrup USDC, and also the open-added USDO. And for there are also other type of stablecoin like the funding rate based trading backed stablecoins such as the Ethena USDE and also the Resolve USR. And there are also like on-chain yield strategies backed stablecoins such as the Falcon USDF and also the Reservoir RUSD. And all these stablecoins, simply holding the stablecoin can get you some level of yield from 5% to 10%. And however, as users are getting more and more aggressive and the sentiment turning more and more risk on, a lot of users are seeking to build leverage on top of the stablecoins. And however, when they're doing that, one of the biggest concerns is that if the borrowing cost is going to stay below the yield coming from the collateral, whether it's RWA back or the base trading back or the on-chain yield strategies back. If you're building leverage to hold on to this yield-bearing stablecoin, you have to make sure that the online yield, the borrowing cost is at least lower than online yield, so that for each level of leverage, you can farm from the spread between the supply APY and the borrower APY. However, as we already know, borrowing costs can be pretty volatile. So let's use one example here. If you look at the market, and for this SDUSD, USDC. So SDUSD is also the funding rate and the RWA back currency yield-bearing stablecoin from Elixir. So you can see that if I'm building the leverage position on this yield-bearing stablecoin with USDC, the borrowing cost can actually be pretty volatile, even only in the last 30 days. And quite often, it goes above the level of 10%. Even when like the long-term average, like the 30 days average of the APY of like the USD is only around 8 to 9%. So it means that there's a chance that if I'm building this leverage position, there's a chance that I might be losing money because borrowing APY can be very volatile, and then it can go above the level of the native APY for holding on to the SDUSD. So TermMax is here to solve the problem. So you can see here, like in the borrowing section, it means that where you can supply the collateral asset and to borrow the debt asset. So for example, the CUSDO, which is the open-added US Treasury backed currency, is earning like around simply holding it, you'll be earning around 5 to 6% yield from the US Treasury. And then you can see if I'm borrowing here USDC with supply USDO and borrow USDC, the borrowing cost is around 2.58%, which is lower than the native APY of the USDO. However, that is not guaranteed because this kind of rate is also pretty common, for example, on Aave, Morpho. However, the most amazing part about Max is that I can actually supply collateral and borrow USDC at this very moment. And then you can see there's a maturity here. It means that from now till the maturity, if I borrow at this very moment, I can lock in the borrowing cost at 2.58% no matter how the market moves. So it means that I can lock in for this leverage position until the 25th of July. So this is the most powerful part of TermMax. I can borrow at a fixed rate and therefore have a better visibility and also higher control over the return of my position. And that's the reason why when the stablecoin leverage loop is getting more and more popular, TermMax is also growing pretty fast. And because Term helps the user to solve one of the biggest concerns when they are doing this kind of strategies. And the other more powerful use case for TermMax is that it not only supports yield-bearing stablecoin loop with fixed rate, it also supports PT loop with fixed rates. And why that is relevant is because even though for yield-bearing stablecoin, like for example for SUSDE and for example like for USDO, it's like RWA back, so I can have a better visibility about how the yield going to look like. However, for funding rate yield-bearing stablecoin SUSDE, when the market is very hype and everyone is going long, the funding rate can be pretty high. And in the last cycle, the APY is like above 20%. However, when the market goes down, funding rate tend to plunge. So like for example, in most of the time in March, in April, and in early May, SUSDE is only earning single-digit yield. And so it means that for those people who want to build leverage on funding rate back stablecoins such as SUSDE or let's say USR from Resolve, if they're doing it on Morpho or Euler, not only can they be certain about how the borrowing rate going to look, they also have to worry about how the supply APY for this kind of collateral going to look. But if I'm holding the PT SUSDE instead, I can be pretty confident that if I hold them to maturity, the yield going to be exactly the entry level of the PT yield when I first enter into the PT position. So for example, if I buy the PT today and the yield is around 10%, and if I'm holding to maturity, at the end of the day, I'm going to earn 10% no matter how the funding rate moves. And if I do it on TermMax, so as you can see, I can do this kind of PT loop, for example, on the Morpho as well. However, I still need to worry about the borrowing cost because the borrowing cost can be pretty volatile. See, it spike from time to time. However, if I'm doing it on TermMax, you can see that I can supply PT here and then borrow USDC, and then I don't have to worry about the borrowing costs up until the maturity of PT because I can borrow at 6% and it's going to stay at 6% until maturity. So if I'm buying this PT at 10% and I'm borrowing at 6%, it means that if I hold maturity, I'm going to earn 4% for each level of leverage I'm using. So if, for example, if I'm doing like 8 times leverage, I'm earning 7 times 4, which is 28%, plus the 10%, which is 38% in total. And if I hold maturity, the 38% is guaranteed. So this is the reason why TermMax is powerful and it's growing pretty fast. It is because that it not only supports the yield-bearing stablecoin loop with fixed borrowing rate, it also supports the PT loop with a fixed borrowing rate. It is like a good alternative for major lending market, Morpho or on Euler. Like for both of this market, even though the liquidity are deeper and the integration probably might be better and more diverse. However, no matter which pair you are doing, you always have to worry about the borrowing costs because, for example, like for this USDC, you have to compete with all the other pairs borrowing from this for the same group of liquidity, USDC liquidity. So that's the reason why when the market moves up, the borrowing costs tend to spike because you are essentially competing with all the other pairs for the same batch of liquidity. And on TermMax, you don't have to worry about that because you're already locking your and you just need to hold the maturity. And it is not only useful for USDC, as you can see here, it's also useful for ETH because there's also like more and more bearing ETH assets in addition to LST and LRT. For example, like YieldNest ETHX, it is actually an LRT back management fault. It means that you supply one ETH or any kind of LST or LRT, and then YieldNest, which is the issuer of one ETHX, will use your LRT to supply liquidity on chain to build leverage staking position. And therefore, simply holding one ETHX in the last 30 days, you can earn 8 to 9%, which is much higher than the of 2 to 3% and the LRT yield for 3 to 4%. And then you can borrow ETH to build leverage on TermMax here. And then you can see the borrowing cost is at 3%. And holding on to one ETHX give you like around 7 to 8%. So for each level of leverage, you're actually earning 5 to 6% of the spread. And then if you hold maturity, you can be confident that up until April the 29th, the borrowing cost is going to stay the same. So that's the reason why the TVO of TermMax is growing pretty fast. So this is a borrowing market. The borrowing market is for those who are holding this asset but want to like see a better breakdown of how the APY of borrowing cost is going to look like and how the capacity is going to look like and going to borrow against what maturity. However, if you already know what you like to do, you can also go to leverage page to save the gas costs because you already know like how the borrowing cost is going to look like and then what you're doing. So at here, you can just click on the position you want to build leverage. For example, like the HSD PT we are looking at, and then just click on here, and then you can build leverage. And then the TermMax will help you to bundle the transaction. So you don't have to like do it manually. For example, supply and then borrow and swap. And here on TermMax, they will just borrow a flash loan for you and then swap all at once, and then help you to build a position within the same block. So it means that you don't have to worry about the gas costs changing. You don't have to monitor the price impact and slippage because when you connect the wallet, the TermMax will show you how they're going to do it, and they'll show the estimate of the price impact, estimate of the slippage, estimate of the gas costs, and then you don't have to do it by yourself. So that is a better user experience. It is actually exactly what Euler is doing with its strategy section. Just help you to build a loop and help you to identify the best yield opportunity only with one glance. And that's about the leverage position. However, if you are not a leverage farmer and you are not interested in leverage, you can also use the leverage, like this yield-bearing stablecoin leverage loop trend as a tailwind to boost your APY, because you can also lend against these leverage farmers here. So say you notice that a lot of people want to build leverage on this PTSUSDE, and you also have some USDC on your hand. You can just supply to the list market, and then to supply to the people who want to build leverage with the PTSUSDE, borrowing the USDC, and then you can get 10%. But you have to keep in mind that out of this 10%, only 5.4 or 7% right now is organic yield and is fixed. So if you're lending on TermMax, the rate going to be fixed as well, just like how the borrowing rate is going to be fixed. And the rest of the 5.43% from this 10.9% is actually from the TermMax pre-deposit, pre-mine incentives. And the yield here is only an estimate because TermMax is not alive. So they're just using the estimate FTV to help you to calculate the rough TermMax APY. So this is a TermMax APY is for reference only. However, you can still get a better idea about how simply lending to the leverage farmers, you can still get like 10%, which is higher than the Aave USDC lending yield at around 4 to 5%. And on top of that, if you're not sure about how to choose your own lending market, you're not sure about how to analyze the collateral qualities and how to analyze the liquidation situation and how to get the best yield, you can also supply here into the earn section. It is the votes managed by different curators, such as TermMax and also V Capital. You supply USDC here, and then they'll you to get a better allocation across different blue chip collateral, and then help you to maximize your yield. TermMax is not only for the leverage traders, it's also not only for the fixed rate borrower, it's also a good protocol for passive low risk lenders, and also a good protocol for those people who are not sure about how to manage their asset, because TermMax can also do it for you, and then TermMax is also working with other top tier curators to help you to maximize your exposure and also your allocation. So that is about why TermMax is growing like super fast and what the TermMax is about.